This is the story of how a private company with shareholders, a board of directors, and a stock price conquered a nation of over 100 million people and became the most powerful corporation in the history of the world. At its height, it had its own army, twice the size of Britain's. It waged wars, deposed kings, seized cities, and let millions starve, and it did all of it to pay a dividend. It began with a handful of London merchants chasing pepper. It ended with the British Empire. This is the East India Company. On the very last day of the year 1600, Queen Elizabeth I signed a royal charter. It handed a group of London merchants a monopoly on all English trade east of Africa. A single company would control an entire hemisphere of commerce. They wanted one thing above all: spices, pepper, cloves, nutmeg, pound for pound, worth more than gold in the markets of Europe. But the seas east of Africa already had a master, a rival company richer and more ruthless, the Dutch. In 1623, on a tiny spice island called Amboina, the Dutch seized a group of English traders and the Japanese mercenaries who served beside them accused them of a plot, tortured them, and beheaded them. The message was unmistakable. The Spice Islands belonged to the Dutch, and so the English, humiliated and outgunned, abandoned the spice race and bet everything on India. They had already built a trading post at Surat. Now it would become the whole strategy, the most consequential retreat in history. Because in 1600, India was not a backwater waiting to be saved. It was the richest place on the planet. The Mughal Empire produced roughly a quarter of everything manufactured in the entire world. Britain at the time produced less than 2%. Its cities dwarfed London. Its emperors ruled tens of millions from thrones encrusted with diamonds. The company arrived not as a conqueror but as a humble beggar, bowing low at the Mughal court, pleading for permission simply to trade. And for 150 years, that is all it was: a trading company, warehouses, clerks, account books, and ships. But India was changing. The mighty Mughal Empire, weakened and divided, was beginning to crack apart. And a company that had been allowed to raise a few soldiers to guard its warehouses suddenly found itself holding something very dangerous: a private army in a land coming apart. The man who would turn a trading company into an empire was an unstable, brooding former clerk named Robert Clive. Clive had been shipped to India as a teenager to push paper. He loathed it. He was lonely, in debt, and sunk into a depression that would follow him for the rest of his life. But on the battlefield, he discovered a genius for nerve, pluff, and violence. In 1756, the young ruler of Bengal, and the richest province in all of India, grew tired of the company's arrogance and stormed its base at Calcutta. The company wanted revenge, but far more than that, it wanted Bengal's bottomless wealth. Clive marched out to meet the new Nawab's vast army beside a mango grove called Plassey. He was outnumbered more than 15 to 1, 3,000 men against 50,000. But Robert Clive had not come to win a battle, he had come to close a deal. Before a single shot was fired, he had secretly bribed the new Nawab's own commander, a man named Mir Jafar, promising to make him the new ruler of Bengal if he betrayed his master on the day. When the battle began, Mir Jafar held his soldiers back. The Nawab's huge army, betrayed and leaderless, fell into confusion, and the monsoon rains soaked their gunpowder into useless paste. By evening it was over. The company had seized the richest province in India, not by winning a fight, but by buying the result. Clive walked into the treasury of Bengal and helped himself. He sailed home one of the richest men in Europe. The historian William Dalrymple calls it the supreme act of corporate violence in world history. Plassey changed everything. The company was no longer a trader. It had become a tax collector for some 30 million people. In 1765, it took the legal right to collect all the taxes of Bengal. For the first time in history, a corporation directly governed a nation. And it governed for exactly one purpose: the dividend. It squeezed Bengal for every last coin. Then, in 1769, the rains failed and the crops died. As a famine spread across Bengal, the company did not lower its taxes. It raised them, and its own men cornered the rice that remained and sold it back at famine prices. By the time it ended, by some estimates, 10 million people were dead, perhaps a third of the entire population of Bengal. In London, the company's share price barely flinched. But ruling an empire turned out to be ruinously expensive. Despite looting a continent, the company spent so recklessly that by 1772 it stood on the edge of bankruptcy. It was, in the language of our own age, too big to fail. Its collapse would have dragged down half of London with it. So the company did something that will sound very familiar. It went to the government and it asked for a bailout. In 1773, Parliament lent it the money, the first great corporate bailout in history, in return for the first real government controls over the company's empire. To help it recover, the company was handed a monopoly on all the tea sold to Britain's American colonies. The American colonists were not grateful. In 1773, they boarded the company's ships and threw its tea into Boston Harbor. A tax revolt over one corporation's tea helped light the fuse of the American Revolution. As for Clive, dragged before Parliament to answer for the fortune he had plundered, he was unrepentant.
I stand astonished at my own moderation.
He was cleared of all charges. A year later, he was dead, by his own hand, most historians believe. For another 80 years, the company only grew, swallowing kingdom after kingdom, until it ruled almost the entire subcontinent. By the 19th century, this trading company commanded a private army of around 250,000 men, roughly twice the size of the British Army itself. But an empire run for profit by foreigners was despised, and in 1857 that hatred finally erupted. The spark was a rumor that the company's new rifle cartridges were greased with the fat of pigs and of cows, an offense to Muslim and Hindu soldiers alike. To load the rifle, a soldier had to bite that cartridge open. The company was, in effect, ordering its own men to defile their own faith. The company's own Indian soldiers rose up, and the rebellion swept like fire across northern India. The fighting was savage on every side, atrocity answered by atrocity, a bloodletting that horrified the world. The company crushed the rebellion, but it had lost control of its own empire, and back in Britain, the government had seen enough. In 1858, the British Crown stepped in and stripped the company of everything it had, its armies, its lands, its power, all seized by the state. The government of India passed to Queen Victoria. The British Raj was born and built directly on the empire that a company had spent a century assembling. And the East India Company itself, it lingered on, hollow and powerless, for another 16 years, not until it was quietly dissolved by a single act of Parliament in 1874. The most powerful corporation in the history of the world ended not with a battle or a bang gaze, but with a paragraph. It had shown the world exactly what a company could become when profit met power, and nobody for 100 years was willing to say no. But remember why the English came to India at all. Because a rival had beaten them to the Spice Islands. That rival built the richest company the world has ever seen, and in doing so invented the stock market itself. That is the next story.